Alright, well, welcome to this video tutorial about cash and accrual methods of keeping track of your finances. Specifically, this is for mostly the property management industry, and if you manage your own portfolio, it will do you justice just to understand how money works a little bit better. A lot of times property owners will call us up and they're suspicious about the reports that they get. And here's why in this particular case. An owner understands that they have a rent roll of $1,465. That's what they're expecting in rents for that month. Now they get a report, let's say from us right here, that shows that during the course of this month, February, they've received $775. And that's hard to justify, hard to reconcile, because the rent roll is obviously quite a bit higher than that. So what's the discrepancy? Well, most property owners, what they're looking for is a nice, smooth tracking of their money. And the downside to that is that it's not an accurate reflection of money. You can do it, and that's called the accrual method. And that brings the information from the charges, what we charge in rent. See how nice and smooth this is? If the rents change, it moves a little bit, but overall, very, very smooth. And whereas in real life, it's not what shows up. You'll see here, February, same time frame, that the income was $1,465. Well, that's what we charged. Alright, so let's look at a physical representation here of what happens. Every month we charge the same amount in rents right there. It's very stable. And of course March there were no charges. So now how does the money come in? Let's look at it physically. Look at that. All over the board. But what's interesting about this is this number, $10,255, is exactly the same as what was charged. So it doesn't really matter how the money comes in. It is coming in. It might come in a day early. It might come in 32 days late. But the money is coming in. We're charging it. And this, when we charge it, is what the accrual method uses. And when we receive rents, that's when the cash basis will actually, where this derives the information for the cash basis, when they pay us or pay you the rent. So let's run through a couple of examples here. We've got up here the accrual based system, and we need to, let's just say, let's charge next month's rents. Alright, rent charge for March 1st for this tenant is $690. Alright, and for Mr. Doe, we have a rent charge in March of $775. Alright, so what does this do? Nothing really happened. There's been no transfer of cash to anybody. But watch as we refresh this report. This is a profit and loss report month over month. Look at that. March. So very consistent. We're charging March rents, $1,465. But the vulnerability here is if you're using the accrual method, you never actually know whether or not your tenants are paying you unless you start to manage your accounts receivables. Alright, so that's the vulnerability and why we never send anything in the accrual method. It's nice and steady, but there's a lot of an opportunity to mess up how much cash you're actually getting in and collecting rents. So what does it do to the cash basis reporting? Alright, so the cash method, look at that March column, nothing. When you charge the rents in the cash method, it doesn't do anything. So what we need to do, clearly, is on March 1st, because these tenants are very perfect. Let's see, this one's bringing in some cash. I'm going to make sure I notate This one's $775. That's okay, we're pretending. And this one's also bringing in some cash, and it's $690. That's okay. So then, let's go back to the accrual method and see what it did there. All right, nothing changed there. But let's look at the cash. All right, so in the cash method last time, there was nothing in this column because all we did was charge it. Well, this time, because they brought the rents in on the 1st of March, it's showing up in March. Now let's see here. Here's a good example. Let's see what happens when the tenants bring the rents in a little bit early, before March. So what we'll do here is change the transaction date to the 29th of February, which is very common. They actually brought the rents in on the 29th of February. All right, so now what does that do? Well, you can probably guess by now that there's nothing in March, but it doubled up in February. Okay, so it just depends when they bring the rent money into the office. And real quickly, let's do the payment side of things. They're going to pay certified property management. This is going to be a charge against, let's say, the property. It's fake. It's $500. It's let's say this month for this property for make ready or turnover, whatever you call it, and we hit save. Now, in the accrual method, we see the $500 expense right there. We didn't pay the bill. All we did was create the bill. So now let's go pay it. And let's pay this $500 bill on March 1st. After changing this report to the cash method expense, I don't see the 500 anywhere, right? But we go into the bill center. We're going to write a check for March 1st. So the work was done, let's say, in February, but the money came into the system and we had enough to pay the bill in March. We will refresh this. Lo and behold, there's the $500 expense. So the cash, when the cash comes in, it keeps track of it, and when the cash goes out. In the accrual method, when it is charged and when the bill is created is when it will show up on the financial report. So the reason I bring this up to you is that, assuming that you're dealing with a reputable property management company who's looking out for your best interest, you get a report like this, it looks odd. Just consider that previous months the tenants may have paid, and also of course consider that maybe they haven't paid yet, or they're paying late, and that would also highlight a problem. So anyway, this is the first in many videos that I'll be doing on financial reports. I'll try and keep them short and simple. This video is brought to you by Certified Property Management here in Omaha, the company I work for, in conjunction with Operation Landlord. Thank you.